had made $4.3 million my first year at Keller Williams. I made over $5 million my second year at Keller Williams after my split. I said, I can give this back to myself. If I start something that's going to create my own. In the state of Texas, you have to be a licensed realtor for 4 years in order to become a broker. So I started a team. So the Bailey-Watson Real Estate Group effectively started as a team. And so when I started this company, LLC, 10 agents joined my team. And then by the time I got to 12 months, I was in 12 locations across the United States with people on my team. So I went to Texas, I went to Dallas, I went to Houston, I opened up in LA, people started joining me in Atlanta, and then it just grew legs. Now, and all the names that she said, Chicago, Indiana, Miami, agents that are working for me right now today. So total right now today in 2023, I have over 250 realtors that work directly for me, that I directly mentor. I'm not selling them anything through an assistant. They can call me direct. And so fast forward, as I'm building that, I get a message from Black Enterprise, and they say they selected me as a top entrepreneur in the United States. And they selected 5 people, and I was one of them. And so that taught me that social media is important, because people are watching that. You had no idea. They found me on Instagram, and I really didn't have a lot of content. I didn't have a lot of information that I was putting in. I didn't get a lot of likes. So that showed again that likes don't translate into business. People are watching you. They're just waiting to engage with you based on what the information that you put out there. So be mindful of the things that you put out there, because you never know. So when I went to San Francisco, which they flew me out, put me in a hotel, put me on a panel with Angela Yee, Akon's talking about his crypto city. Angela Yee had a makeup line, I think it was like some lip gloss, and I'm the only real estate agent in the room. I'm the only real estate agent in the room, and that showed me I need to be in the rooms with no real estate agent. Because when you go to the Bar Louie's and you go to little events and they all, come on in, y'all, it's 58 realtors, we all together. I want to go where the customers are. I don't want to go where our friends are. I'll talk to y'all later. This is about business. And so when I got on that stage, it elevated me to my mindset, thinking, okay, man, I need to talk to as many people as I can in this room. And I did. And so from that point, more people started getting to know me that were in high profile places. And they're like, oh, that's the girl in Dallas. We need to reach out to her when I need something. Oh, she got agents in New York. I'm going to call her when I need something. Start elevating me. And so it got to a point where my company was running like a machine. Agents were joining left and right. I have the mentorship that I'm giving, and that's great. But then I started looking around and I said, what can I do that's going to outlive me? Because when you make a lot of money, you have to put it somewhere, otherwise the government will take it in taxes. That's just the bottom line. So if you don't reinvest your money, you're going to lose it. And so what I did was I said, I'm already a part of real estate, and these builders are going to be here when we're long gone. This room will still be here when all of us are gone. So build a building, build a house, put your money in the dirt, build something that, or do something that's going to outlive you. And I started building houses. And so I built 20 homes all over Dallas, Texas. I took $1 million of my own money, cash, and I bought land all over Dallas. And I said, okay, I'm going to put my vision, which were the different types of home styles, etc. And the reason why I paid cash, because people are like, you paid cash for something? Why would you take $1 million and not use the bank's money? Well, when you're building, you have to have experience as a builder, right? As some of you guys know that are in real estate, and you have customers and clients who get turned down for their loans, is because they don't have experience, and they don't have an experienced builder to validate what they're trying to do. So to avoid having to go to a bank and be told no, which I don't like, I just put my own cash down. So sometimes you have to start with your cash. Don't be afraid to put your money in the ground. If you really truly believe in something, then go forward with it. If you don't believe in it, then don't do it. But I believed in it, so I did it. So I erected these homes all over Dallas, and so I sold them myself. I never used another real estate agent on any of the transactions that I did from my houses, because I had so many sellers that I helped, and I had so many buyers that I helped, that I had a network of people that couldn't wait to see my product. It was a tribe. I had my own tribe. I didn't even have to pitch it to other realtors. Yeah, I posted it, and people were like, oh my God, that's so amazing. But those weren't the ones that brought me business. So long story short, I built all these houses. I 10x'd my $1 million. 10x'd $1 million cash. And I said, all right, God, what's next? I was going to open a title company. I started talking to some of my friends that have Black-owned title companies. I said, okay, but it's a conflict. kind of sort of, when you have a real estate license, you're doing a transaction and you're guiding them to your title company, it don't really look good because you just don't want to make any mistakes in the middle of that process, and they can just shut your whole operation down and affect whatever you're trying to do, right? And your good name. So I started to look into that, and COVID hit, and so I said, okay, all right, COVID, what's gonna happen next? What are we gonna do next? And it gave me time to think, and I hopped on an app called Clubhouse. You guys remember Clubhouse?
Yeah.
Clubhouse is where people of like minds went into these different rooms. And they had a real estate room, and they had a fashion room, they had a music room, they had a room about relationships, whatever you wanted to talk about, because we were all bored. So I hopped in the real estate rooms, and I started to meet people that were elevated in their spaces, in their cities. So Houston, it would be Milwaukee, it would be New York. And we all started to just become friends, because every day we spent all day long on the apps. And so when COVID lifted in Georgia, Florida, and Texas, we were like, we're planning conferences. Our first conference was here in Arlington, Texas. And then it just went from there. I started speaking at all these different events that my friends were putting on because they had their own tribes and they had big followings. And so my name started to now travel through their lanes and get elevated as well. And so we started speaking at events, and I'm going hard. I'm speaking 7 to 10 times a month. I'm out there speaking at different events. And I went to one event, and I got on the stage, and I told my story, my journey about how I built houses, etc., and it stopped there. And I don't know what the next step would be. That was my story, the same thing I told you guys. When I walked off the stage, and like I just went down this way, a guy stopped me and said, would you like an opportunity to own a bank? And I said, I just talked about real estate sales. My whole story I just told you, it did not translate to anything in finance. I didn't talk about anything about banking. I don't know anything about banking. That is above my head. Absolutely not. No, thank you. And I'm just like, I gotta go. And he's like, no, doctors don't own the clinics that they work in. And when he told me that, I know a lot of doctors that I support and help and serve. And I said, you're absolutely right, because I know for a fact they leave and they don't own the building. So tell me more. And he said, you can own the bank, and you can be the owner of the bank, but you don't have to do anything as far, you can hire people for that. And I said, all right, I'm a boss, I could do that. That's easy, I can get somebody, I can hire someone. Okay, what do I need to do? He said, well, I'll have the attorneys reach out to you. And they did. So it was funny. I love to share this story because it's really interesting what happened to me that day. My Airbnb got canceled. I had to take my daughter to the event. I was supposed to go on at 12. I really didn't go on it till 4. And that man stopped me because he was at a bar mitzvah on the other side of the wall where we shared a door. And he just happened to hear me speak at that particular moment. So I know that he was there, and I was there in that space for that reason alone, to go to my next step. And within 2 weeks, I was vetted by the attorneys. I was up and running as a federally chartered bank. And what it took was, and I will share it with you guys, because I trust y'all a little bit. What it took was for me to show that I had the capital. And there are tiers to banking. And I could have done depository, but I said, I don't know as much about accounts and FDIC insured products and checking and savings and merchant services for me to articulate that to someone that I want to service. So I kept it as a non-depository. I said, I'll start as non-depository. I can change it. I can elevate. So I said non-depository, which means that I service only real estate, commercial and residential loans only. And then I said, okay, I'm going to do it at the highest tier, because people started, they can service $4 million and that's it. And that's just where they want to be. But they don't have to do that. I went up to $650 million because I could. That was an option. So I said, let's go all the way up. And then it's like, okay, well, you want to just do it in Texas? No, I don't. I want to go nationwide. Let's go all the way. It could have been, I only have agents in LA, I only have agents here, and those are the 4 or 5 places that I go. But no, I want to go everywhere. I want to go to Milwaukee. I want to go to Kansas City. I want to go to all the places that people live. Because I should. And everything that I could have done that was at a minimal scale, I just took the cap off and went all the way. So the tiers to get into banking, you have to show liquid. You cannot show assets. I cannot say that I own a bunch of properties and this is my platform, my portfolio, take a look at it. Now I'm looking like I'm wealthy. No, you have to show money. You have to show liquid. So you have to have either $5 million cash, $10 million cash, or $50 million cash. So in order for me to operate at the highest potential where I'm able to offer all the loan products, all of the loan products that exist, I went to the 5-0. So once they vetted me, it took literally a couple of days. And I think what was astonishing for them is that I had it. So they were like, we don't even want to give you no smoke. Like, they just let me get in and go. They also actually helped me with paperwork. Like, showed me what to do and say. Told me what to put in different places and spaces and the type of person that I would hire, just so I can get to where I need to get. So I did that. Within 2 weeks, okay, boom, I'm in. I'm qualified, I'm done. Solidified. Prime One Lending Group was the name of my bank that I made up. Prime One Home Loans is my residential section. Prime One Lending Group is my commercial section. And so the next step was to hire employees. And I remember I posted it on Facebook and I said, I'm looking for a branch manager. And I had a few people respond back. But you know, they see me as a real estate agent and they see that I'm building houses. They don't know how I'm doing it because I don't really tell my business. But they see I'm putting these houses up and they probably believe that I got a partner or somebody and I'm just out there as a face. They didn't know that I was doing this on my own. And then I posted I need a branch manager, so it was almost kind of jokey a little bit, like, what's she talking about? I had a few people message, and they were like, oh, I gotta talk to my husband about it. I don't know about this girl. And there's like guys like, how much you paying? I don't know about that. Okay. And so I went and hired somebody that didn't even know me. He had got out of the, it's like an Air Force Academy. Marines, what is that? West Point. He's a West Point graduate. He got his license as a loan officer, and I made him my branch manager. And so that was in line with where I was because I was a veteran. And so, and we built this company together, basically. He didn't build it, but you know, he was my employee. Without him, I could not have even gotten started because I don't do loans. And I had to hire people to sit in different positions for it to operate. And so I started hiring and hiring and hiring. I got processors, I got underwriters, and now I have over 100 people that work directly for me. I have 85 loan officers, over 20 processors and underwriters, and everything that I do is in-house. So I'm a direct lender, which means that I don't broker anything out, which means that everything that I do is in my bubble. So I don't even have to talk to anybody else. There's nothing to talk about, which I like. So the first month that I launched, I had over 300 loans in the pipeline. Because I saw Facebook wasn't working because they was laughing. They like, oh, she a realtor, talking about branch manager, call her, oh, I'll think about it. I stopped posting on there. I went to Instagram because Instagram was showing me love. So I started posting, you know, bank owner, this and that, running and operating a bank, and boom, 300 loans in my pipeline the first month. 300. That's awesome. 300 African-American people doing loans to qualify for a house. And so the reason why I actually started the bank, and it was really profound to me to do it, and I was going to be persistent now that I had the seed planted, is because I know, because I was helping people, that 50% of our loans are denied. 50%. 50%, that's a lot. And then the ones that are approved, the disparity is in the rates. The disparity is in the service. We don't get treated the same way. And you may not see it, but I get to see it because I'm on the other side of it now, and I'm getting more acclimated to the scenario and the situations, and now I'm like, oh, that's why they put those notes in the system when you do an FHA loan, because it's a government loan, and you can only have one case number, and if you have something that goes on in your file, they can actually write stuff on the back end that the customers can't see, but we can see, that says don't do business with this person. They won't never write it like that, but they can articulate it in a way that in the banking space, we know what it means. And when you read those kind of notes, and it's connected to black people that are young, black men who are 25 trying to buy a house just because maybe they sound a certain way on the phone, maybe they reacted a certain way in the transaction, these banks will hinder you for the rest of your life. And so because of that, I said, if I can produce this vision and make it real, I could change the trajectory of our culture as African American people, as minorities. My mother is Latin. She is from Guatemala, so I am half of two things. I'm Central America and I am African American, but I'm a minority, period. And I'm black, because I look black, so don't get it twisted. When I walk around, there ain't nobody speaking Spanish to me, okay? So, even though yo entiende. But, at the end of the day, my culture is important to me. And so I have to do something as I'm living in this life. I don't want to just be a chair in a room.
Come on.
I want to be the table.
Come on. In the microphone.
I want to be the table, because only one person can sit in a chair. A whole bunch of us can sit at the table. And if we build more tables, and I teach you how to build a table, because I know how to build a table. Yeah. This table can go from here to the UK, across the water, and past that. Just imagine what we can do as a people collectively if we put our money in the right places. And I learned that at 19 when I built equity in my house. So when I started this vision and I said, okay, I'm going to do something, this can do something that's going to change the culture and the trajectory of where we are. And then I knew that $1.6 trillion is spent, documented by the African American community. We have what it takes. I don't need to go out there and get up some other cultures behind to get their business, because we already have it in our community. We have it in our culture. We're sitting on grandma's house. We're sitting on equity. We're sitting on our golden egg. We have our golden ticket. We just need to know how to use it in the right way to be successful monetarily, how to be successful and leverage what we have. So when I did the 300 loans in the pipeline the first month, it has been consistent since then, and I'm basically servicing the community in a way that is necessary, it's mandatory. So within 6 months I get a phone call and I'm appointed to the board of directors. Well, I wasn't appointed, they asked me, do I want to do it? I said, absolutely, duh. Why would I say no? So they asked me, did I want to join the board of directors? And I said, well, what is that? What would that do? You're going to be the only African American woman person on the board of directors. I said, what does that mean? They said, you'll be the face and the voice of the black community. You will make the change for the programs and incentives and the things that are put in place across the United States of America for black people. Okay, so what does that mean? That means that, yeah, you get to make a little bit of money on the board of directors because they have to pay you for your time when you go into meetings. But at the end of the day, the money doesn't mean anything to me because I can go out and make money. That's nothing. What it is the power, being able to hear what you have to say. So at first I was like, okay, I'm going to talk to every black person and be like, what do y'all want? Like, come on, y'all. Let's talk, y'all. What do y'all need? What do you want? What do you want? And so, but really, that's really what it is. I have the ability to be a voice and a messenger for the things that we desire and the things that we need, not because they have to do it because they've been discriminating against us, because a lot of times that's the only reason why they do programs anyway. A program is not because I just thought about you. A program is because they're either going to get shut down or they're going to have to pay a fine. What people don't realize is banks, I mean, the fine is nothing. I saw a bank that got fined $31 million for not servicing a certain urban neighborhood in the city of LA. It's called City National Bank. You can look it up. And they were fined $31 million. You can make $31 million in a month. That's nothing. That's nothing. That means nothing. So that's why they don't change. Until they are shut down, which they won't do, it's never going to change. So we have to create our own bridge. This is Selma, and this is the bridge, and this is where we're about to get to the next step in our racial wealth gap. And if you don't want to come on this bridge, it's okay. Go to the other bridge. Keep getting treated the other way. Or you can come where you celebrate it and not just tolerate it. And so I'm not doing it for money. I'm doing it because it is necessary. It's mandatory. It's a safe space and place for us to do business. And so I created my margins to be competitive enough to where if a Rocket Mortgage or whatever the name of the company is that people think they know, we got Quicken Loans commercials on every 5 minutes. You got people that you have relationships with that you've done business with before. But guess what? I can beat their rates. Because I can see what they're doing, because at the level that I sit, I just have my program guy type in the name of the bank, and I see what they're doing at Guardian Mortgage, and I'm like, oh, okay. I can see what everybody does because I'm practicing at the highest power. I'm called a full eagle direct lender. It's called full eagle for a reason. Because I'm eagle-eyeing on everybody. I can see everything. And it's amazing. And so, so I've created my margins to look different. If you do business with me, then you will understand the difference. If you compare the rates to another lender, you would see the difference because I create my own rates. So right now, last week I gave a 4% interest rate. The average is like 4 or 5%. And I do VA loans, FHA loans, conventional loans. That's standard stuff. Anybody can do that. What anybody can't do, and they started doing it, but I was doing it a long time ago, is bank statement loans. So bank statement loans is where if you're an entrepreneur and you run a business, you can qualify for a home without your tax returns. That's a big deal. Because as a business owner, as we all know, business owners try to write off as much as possible. And when they write that off, it becomes a part of their tax documentation. So on their taxes, they look like they're making $30,000, $50,000 when they just made, they're driving trucks and they just made $3 million this year. So I remember truck drivers were always thought, I thought about them in my mind because I'm like, those are the ones that I can relate to, that I know that they are very wealthy when it comes to the things that they can own and buy at any given time. But on paper, it doesn't look like it. So they always had a hard time buying homes. Business owners, etc., whatever the business is, I don't care if it's a bookstore, I don't care if it's a hair salon, I don't care what your business is. You can knit for a living. As long as your business is making profit, I can service you. You only need 1 to 2 years of your business bank statement. But what's unique about my company is I also take your personal bank statements. So some people are not set up like in our community because we don't have guidance. So they take Square and they put it in their personal account. And they do hair and they deposit it in their personal account. And then they realize I should have had a business account, but they didn't have the business account for 2 years yet. Because they just started the LLC because they didn't know they're supposed to have an LLC. So it's like all these things that we're starting to learn in our community, that when you come and you buy a house, you're not bankable. You're not bankable. I wasn't bankable when I went to go build houses. That's why I used my cash. I wasn't bankable. A lot of us are not bankable. That's why we cannot achieve our goals when it comes to financing. So if we educate and speak about all the different ways, we're getting there, but we need a voice, right? So when I come and I speak to intimate rooms like this, it's empowering because I just focus on everyone in this room to speak to them, and now you can articulate and take it back to your community and share with your 20 people that may listen, and they share with the 20 people that may listen, and now we're making change. Now the train is moving. So at the end of the day, I also do DSCR loans. That's a big conversation. DSCR loans are for multi-family properties. A lot of us say, well, should I buy a single family home first? Because it's on Earn Your Leisure, it's on YouTube, it's on the internet. Should I buy single family or should I buy multi-family? You should buy a multi-family because the doors are going to turn profit. Even Grant Cardone's been talking about this forever. Not that that's the gospel, but people know that multifamily, more doors equal more money. 1 door equals $1. 4 doors equal $4, right? So DSCR will take the income that your rents are making on that property and use it as income. So essentially people can own real estate without even having a job. Because if this building is making money, I can use that as income. So you have people on disability, SSI, people with absolutely no employment, they just have a decent credit score, and they're able to own property. I also do 1099 only loans. So if you're a contractor, let's say you're a government contractor or you're a contractor for some company and they pay you in 1099, I can do that only with just a copy of your ID. With just a copy of your ID.
You just changed his life.
I offer over 1,000 different loan programs, so I could sit here and talk all day about all kind of different stuff, but I will talk about the most common products. So we have bank statement loans for entrepreneurs. We have DSCR loans for multifamily. Also consider 8 units residential. So typically, after you pass 4 units, it's in the commercial section. But I could go up to 8 units on the residential section. You know why? Because it exists. I didn't like make this program up. These things exist. These banks just don't want to do these things. And you know why they don't want to do it? Because it puts them at a higher risk. And who lives in the high risk category? Do we live in there? I know the people that live in there. So they don't want to open the door for more things like, nah, I don't want to deal with that. So we're going to go to the 1-4. We know who's going to categorize for that. And we're going to keep it moving. I do FHA loans down to 580. So that I used to go down to a 500. So I had a 500 credit score for my FHA. But I had to change it because of COVID. So it's now 580, 3.5% down, and it helps the people who have gone through divorce or who had challenges. We're all starting to come of age. Our kids are growing up. Maybe you co-sign for your kid to get a car or college, and it's hindering your credit score. You didn't go to college. You can't even buy a house because you got somebody's room on your credit, and then they didn't pay for it. Maybe you help your brother or your sister and they didn't pay the bill. A lot of things are going on in our financial fingerprint. And so it doesn't count you out just because. So 580 credit score, you can buy a home. 620 is my average for conventional. Some companies go all the way to 670, 700. I do 620, and that's a standard across the board. I do offer refinancing. So the people who are sitting on grandma's house, the people who are sitting on their equity and they're like, I don't know what to do. How do I get my money out? Cash out refinance, or you can do a second mortgage. A second mortgage is a home equity loan, not a HELOC. I do not encourage lines of credits. Do you guys know why? A line of credit is like a credit card, right? And what happens when you open a line of credit? What does it do to your credit? It drops your score because your utilization is being impacted. So people typically HELOC, they don't normally take a HELOC or a line of credit out for $20. They take it out for $200,000. So that's my equity. So now what happens to your credit score is that your utilization goes up to 9,000% because that line of credit is open. If you pull that money off, now you're in trouble because you're pulling the money off most likely to buy something else. And most often they're using that money to buy more assets. But when they go to qualify, they can't qualify because the utilization is off, even if they have an 800 credit score and they have income and they make $1 million and they did this and they did that and they've been a stellar payment history. The utilization will supersede all of that.